Volatile markets don't destroy wealth. Emotional decisions do. Think about it. When the headlines scream crash or recession, inflation, the average person panics. But here's the truth. The greatest threat to your wealth isn't inflation. It isn't the Fed. It isn't even the stock market. It's you. It's the emotional decisions you make when fear takes over. In my career, I've watched more people lose money trying to outsmart the market than from the market itself. Because the problem isn't volatility. The problem is how you react to it. Here's the irony. Volatility is the very thing that actually creates opportunity, only if you have the right mindset. Without it, you sell low, you buy high, and you lock yourself into the very losses that you feared. Inside you, there are two voices, the speculator and the investor. The speculator treats the market like a gas station sign. Every day, the numbers flicker. 325, then 375, then 349. They obsess over every change, even though they don't control the price. The investor, though, thinks differently. They don't buy gas for today's number. They focus on the car itself. Does it still run? Does it still get them where they need to go? That's the point. Businesses, like cars, are built to deliver value. The price sign may go up and down, but the engine still works. Speculators panic when the signs flicker. Investors ask, is this business still producing, still servicing, still earning more over the long run? That difference, staring at the sign versus trusting the car, is why speculators lose and investors build wealth. Every crash brings the same excuse. This time, it's different. 1970s oil crisis, the 1987 crash, the dot-com bubble, the 2008 financial crisis. Every time, people swore the rules had changed, and every time, history proved them wrong. So how do you stay rational when everyone else is losing their mind? 3 pillars. Pillar 1, operate within your circle of competence. If you can't explain a business in 2 minutes to a 10-year-old, don't buy it. Pillar 2, insist on a margin of safety. If you think a stock is worth $100, don't buy it at $95. Wait until the panic gives it to you at $60. And pillar 3, treat stocks like ownership. When you buy, you own factories, brands, not lottery tickets. These 3 pillars don't just protect you from volatility, they protect you from yourself. For 99% of people, the simple path works best. Dollar cost averaging into an index fund. Set it, forget it, never panic. This strategy forces discipline. It buys more when prices drop. It builds wealth over time without emotional interference. It's not sexy, but it works. If you're willing to do the work, here's the advanced path. Turn off the noise. Delete the stock app. Build your list of 5 to 10 companies inside your circle of competence. Study their moats, their earnings, their debt, their long-term relevance, and then wait for the panic. When there's blood in the streets, that's when you back up the truck. This is how investors turn fear into opportunity. But for us as Muslims, it's not just about ROI. It's about alignment. Islam doesn't forbid wealth, it forbids exploitation. We anchor ourselves in barakah, stewardship, and ownership. We don't gamble with what Allah made a trust. We build it with discipline. So let me leave you with this. Markets will rise, markets will fall. Headlines will scare you. But if your mindset is grounded, your portfolio is protected. Be fearful when others are greedy, and be greedy when others are fearful. And above all, build like an investor, not a speculator. Thank you guys, I hope this was helpful for you. If you liked what I'm saying or have any more questions, hit the like and subscribe button and drop a comment below. I'd love to hear from you guys. And if you want more stuff like this, go to my website, www.siddiqiwealth.com, and use our tools like our mortgage calculator, our debt calculator. Again, thank you, and I look forward to seeing you soon.